Hello, everyone. I'm really excited to host two amazing and renowned leaders in the early stage startup ecosystem. Michael from Y Combinator, YC pioneered the startup accelerator model and has birthed some of the most thought-provoking companies in the globe, like Dropbox, Reddit, and recently participated in companies which have gone through blockbuster IPOs like Airbnb and DoorDash. Rajan is a renowned angel investor in the Indian startup ecosystem. He has led Google in India and now is investing in defining companies in India and SEA through Search. Really excited to host both of you and welcome to FTX. Let me get started with the most important question in the startup ecosystem. I think COVID has really changed how startups operate, how entrepreneurship is perceived. What is your view on given the post-COVID world? Do you think how startups are getting built in the current year and in the next couple of years, is that going to change? Do you see some new trends emerging out of COVID in the startup world itself?
Rajan, I'll let you start.
Yeah, I think. Well, first of all, Harshil, thanks for having us. It's great to be here. Look, it's been a very interesting year. At the beginning of March, Sequoia, our US team sort of published a blog, right? A blog, COVID, which is Black Swan 2020. And I think if you were in India at the end of March, early April, things were looking really, really tough, right? Because basically the economy had shut down. At the time, we didn't know how long the economy was going to be shut down for. Ended up being shut down for about 70 days, which meant that many businesses, obviously not your business, Harshil, but many businesses' revenues went to zero. Almost all companies had to take pretty dramatic sort of action to, get their cost structures in line. Many of them had to pivot their businesses and so on. So I would say, look, it was very, very challenging period, not just for the world, not for humanity, but also for startups in India. But I think as we sit here almost at the end of December, quite frankly, I think it's been, we could have never projected, I think, several things that happened this year. I think the first and foremost is the acceleration of adoption of technology. Digital specifically, but technology more broadly by consumers and businesses, right? Delhi and NCR together with Zino, we published a report in early October of this year, right? Looking at the impact of COVID on the Indian startup ecosystem. And what it basically showed is even by the end of September, almost all digitally led segments, with the exception of online travel, hospitality, and dine-in restaurants, had actually gone back to pre-COVID levels, pre-COVID defined by February 2020, or was significantly ahead, right? So EdTech was 2x of where we were in February on revenue. Digital health was 5x. E-commerce, depending on the category, was either 100% in something like fashion, or electronics was 130, grocery was 150, and then you guys know what's happened to the payments business, right? So I think whether it was consumer where adoption has been significantly faster than we would have ever imagined. So, I think you've heard many folks say that change that could have taken 5 years has happened in 5 months. I think in India, that's really true. Probably more like change that would have happened in 3-4 years, happened in 8-9 months. And similarly with businesses, right? We've seen dramatic acceleration of adoption of digital in technology. So what that's really done is across many segments, it's accelerated growth, either user growth, in many cases, revenue growth. So that's part one. I think the second thing that's happened in the Indian startup ecosystem, especially, and also it's probably true in some parts of the world, is founders, acted very, very quickly to right-size their companies, right? Michael, you may or may not be familiar, but at later stages in India, we did have a problem in our startup ecosystem where being profitable was the furthest thing on anybody's mind. So we had massive amounts of burn across a large number of companies. And we were quite shocked to see how quickly, and actually very pleasantly surprised and excited to see how quickly burn rates came down, right? Costs got brought in line, discounts went away, pricing changes were made, and so on and so forth. And burn rates just went from, companies that were losing 30, 40, $50 million a month were getting down to $1-2 million of break even. Companies that were losing a couple of $1 million a month went to actually making profit. So I think that's the other thing that happened, which is, I think Indian entrepreneurs got much more focused on the fundamentals. So those two things, what it's really meant is, I think we're exiting. It's sort of ironical that in the middle of COVID, because we're all still in the middle of COVID, we are exiting 2020 with our startup ecosystem being healthier than we were in pre-COVID, healthier on many dimensions, healthier on unit economics, healthier on growth rates, and so on and so forth. And then in terms of new trends, look, it's what we've seen across the world. I think EdTech has accelerated dramatically. Digital health, which is quite nascent in India, is now coming of age. You've seen adoption across segments sort of really go through the roof. I mean, SME is probably sort of the single biggest story of the next 3-4 years in India, where SME adoption of digital has accelerated dramatically. And then in sectors, far ranging as ag tech, we're seeing, large number of farmers, because pretty much every consumer, if you had access to a smartphone, is now spending a lot more time online, and businesses that really weren't digitized are getting digitized. So we're seeing many different segments accelerating. And then we've seen lots of very new, interesting companies emerge in spaces like remote work, collaboration, and so on and so forth. So I would say, we could have never expected, I think, Harshil, where we would be sitting at the end of 2020, right? When you say Black Swan 2020 in March, and you kind of, project where we are today, you look at what happened with the IPOs in the US IPOs last week. I mean, it's just unreal where we are today.
I think, Michael, YC recently closed its latest batch. So are you seeing similar trends in that, in terms of the kind of startups that are coming up, how they have been impacted by COVID?
Yeah, I mean, I can't say anything more eloquent than what we just heard. I think that for me, looking forward, what's very interesting is that COVID changed how most people live their day-to-day lives. And for startups, especially early stage startups, when something changes really quickly, the larger companies take a while to adjust. And that opens up a door for opportunity. And I think that we would more typically see that with the platform change, the rise of web apps, the rise of mobile. But pandemic caused something similar. And I think that there are a lot of folks right now, young founders, who have many more opportunities, because most people had to change how their lives work. And most people saw the tools they were using for years, sometimes decades, no longer work in a COVID world. And so I think this should be an exciting time for early stage and young founders. There's a lot of work to do.
I think on similar note, I think as companies get built in the early days, the next question is funding. Do you see the funding atmosphere has changed in the post-COVID world? Are investors looking at different things now? Like Rajan hinted on profitability and some of those things, but are those the new metrics that investors are focusing on, or is it still primarily chasing growth?
I mean, in my experience, we were having this conversation yesterday. I don't know of an easier time to raise early stage financing. And I've been in the tech world since 2006.
Yeah.
And I don't know of an easier time. One of the things that I think has been amazing is watching how investors have adjusted to this. And we saw that over the course of 2 YC batches. In the winter 20 batch, investors were still trying to figure out the status of their portfolios, how they would move their operations online. By the summer 20 batch, everything had changed. Every single dollar was raised virtually. International founders had massive opportunity that they never had before. They didn't have to be here in the United States. And one thing I think stylistically is that a lot of investors had money and not much to do. And so it took more meetings and wrote more checks, which I think is great for early stage founders. And so I think the fundraising environment has been amazing. I think the really interesting question is going to be what happens as the vaccine comes out. Will this be a more permanent change? And I hope it will, because I think it's going to provide a lot more opportunities for international founders if you don't have to be in the same location as the people you're trying to raise money from. So we will see.
Yeah, on that note, Rajan, I have a question just continuing from that. There's sometimes questions that, is there too much money chasing founders, especially in markets like India? Like, is there possibility to build more capital efficient companies if there was not as much funding available? Or do you see it as a net positive trend that more companies will be able to come out of country like India?
Yeah, I think, look, there's always not just the possibility, but I think the imperative to build more capital efficient companies, right? Google is $1 trillion company and they raised $25 million in its lifetime. You know, I'm hosting Nitin, who's the founder of Zerodha, on Friday at Surge. Company's worth several billion dollars, hasn't raised a penny ever, right? So I think I do think as founders, you know, the ability to build a very large, enduring, legendary company without having to raise $10 billion should be a goal. All right, you know, it can be done. It's been done many times before. I think in India, Harshil, look, it's very interesting to see what has happened in India over the last decade, right? If you go back to 2010, India had a few thousand startups, less than $1 billion of annual venture capital funding, and no unicorns, right? If you look at where we are at the end of where we were at the end of 2019, which is a year ago, India had over 40,000 startups, had 25 unicorns, and last year we had $14.5 billion of venture capital funding. This year, with the exception of the second quarter, calendar quarter, right, which is April, May, June, where we saw about a 55% reduction in venture funding. Q3 was back, same as Q3 last year, and we'll see where Q4 lands. Right, I think we'll get pretty close to where we were last year. So we may be off by, let's say, 2 billion, maybe it's 12 and a half, maybe 13 billion of venture capital funding this year. So we do have, I mean, you know, we're a pretty well capitalized ecosystem today. But in many ways, India is still getting started, right? As you all know, Harshil, you see this in your business every day. We have 500 million connected internet users. In 5 years, we'll have 1 billion connected internet users, right? We have, call it 75 million small and medium businesses in India. Less than 10 million of them are truly digitized. I'd probably say maybe 2 or 3 million are truly digitized, right? So we got another 50, 60 million small businesses to be digitized. And we have large parts of our economy that really don't have any tech penetration, right? So when you look at it from that standpoint, and you overlay on top of that the fact that China, which is obviously at least a decade ahead of us, maybe possibly more, gets between 30 and $40 billion of venture funding per year. That was last year. You know, we still have a long ways to go. So I think, you know, I've often said this, Harshil, which is, you know, we've come a very, very long way if you look at the last 10 years. But in many ways, we are still seeing the trailer, right? The movie hasn't started yet. The movie starts when you start seeing companies that generate billions of dollars of revenue, right? You know, getting to a unicorn, you know, is very interesting. And, you know, but at the end of the day, it's a valuation, right? When you can generate $1 billion of revenue, generate a couple of $100 million of operating income, now you're a company, right? And then when you start generating $1 billion of operating income, you're a real business, right? So I think in the next decade is where we are going to see, you know, companies with scale, real scale, revenue scale, profit scale, with significant cash flow emerge out of India. And building those companies, you know, will take time and will take more capital. So it's a long answer to your question, but I don't think, you know, I think we need to have more entrepreneurs starting up, many more entrepreneurs starting up. And every year, by the way, we are amazed at Surge, right? Surge was launched 18 months ago. And if I look at our first cohort to where we are today, you know, every cohort, the quality of our founders just keeps getting better and better and better, right? So we need more entrepreneurs starting up in India, building for India, building for the world. But we also need many more investors, right? I think it's very important that we have many more investors. If you look at our angel ecosystem in India, Harshil, you know, we probably have less than 1,000 active angels, maybe 500 angels who do more than a couple of deals a year, right? I mean, that's a fraction of what, you know, Michael and the team and others see in the US. So I think we have a long way to go. We've come a long way, but we still have a very long way to go.
Yeah, no, that is true. And again, getting from that, I think my next question is to Michael, right? YC has been investing a lot in Indian startups, and I think the number of Indian startups in every batch has gone up. I think we were one of the first few companies to get in, but it has increased a lot. And you have personally worked with some of those companies. And as you look at the kind of applications that come from India to YC, have you seen any change in terms of how founders are looking at it? Has the audacity or the kind of domains that founders are targeting from India, has it changed in the last couple of years, given that the ecosystem is becoming a little bit mature?
I wouldn't say that. I would say something slightly different, which is that one of the things that I appreciate about almost all of the applications from India, and actually, to be honest, many of the applications from around the globe, is that there's clearly a generation of founders who believe in their country and actually want to be part of advancing their country. And I think as a US based investor, that's refreshing, because I think that oftentimes American founders, myself included, we take our country for granted. You know, we're so lucky, but I think sometimes we can act too selfishly. And I think that what's amazing about the global startup community is that it takes seriously that it can be part of the engine of innovation for the world. And so many companies that we see applying from India are effectively trying to help, whether it's help shopkeepers, whether it's help parents who are trying to educate their kids. They're just trying to help. And they're not trying to extract, they're trying to add. And I think that's been an amazing trend. And now that Y Combinator is 40% international, I think people don't realize how that affects the US founders. You know, I think sometimes we can kind of cast America and Silicon Valley as kind of the shining light, the beacon or the example. But, you know, being here, I can say there's a lot that we can learn from the international community. And I kind of think that at YC, our responsibility has been, how do we take what's best about Silicon Valley and export it? And how do we take what's best from the rest of the world and import it? Because I think that as everyone in the world can see, America could use some help, I would say.
That's a very interesting, that's a very interesting point. And I would like to connect that to like ask a follow-on question to Rajan. I think somewhere, Rajan, do you feel that is also a curse, right? Like, because most Indian companies are very strongly focused on India, while most companies in Valley are building for the world. I think, Rajan, you recently tweeted that the time has come for global from day zero brands to emerge out of India. Do you believe that Indian founders can also build global companies in the next couple of years?
No, absolutely right. I think not only do I believe, I think the data is now here for us to, you know, at the end of the day, data trumps points of view, right? So if you look at the SaaS space, Harshil, right? 2 years ago, India didn't have a single $1 billion SaaS company outside of Zoho. I mean, Zoho was being bootstrapped, you know, built over a long period of time, and it was a phenomenal company. But if you look at sort of the newer generation of Indian SaaS startups, so 2 years ago, Freshworks became the first SaaS startup. Then we had Druva, then we had iCertis. And I think today, Zenoti announced their latest funding round, right? That makes them a unicorn. So that's the 6th SaaS unicorn that we've seen over, you know, that companies that have become unicorns. I mean, many of these companies have been built over the last 5 or 10 years, right? And I don't know whether you guys read, but you know, our first ad tech company went public on Nasdaq. It's trading at over $1 billion, right? I mean, so I think, and these are all global companies, by the way, right? So if you look at Freshworks, it's India to the US. They started off with SMB SaaS and then migrated to mid-market. Druva is India to the US, actually India to the world now. You know, enterprise SaaS. iCertis is India, US enterprise SaaS. Postman is basically a dev tools company, right? So actually this idea of you know, building for the world from day zero is a reality. In fact, if you look at our current cohort, so Michael, we have 15 to 20 companies per cohort in Surge. We run 2 cohorts a year, and we are focused on India and Southeast Asia, right? So we have half our companies from India and half our companies from Southeast Asia. But if you look at our current cohort, which we have 17 companies, over 11 of them are building beyond their borders, right? And most of them are actually building for the world. So SaaS companies that are building for the world, dev tools companies that are building for the world, like Lambda Test is an example, right? It's a testing company that basically is, you know, all their revenue comes from outside of India. A lot of it actually coming from the US. So this is actually, in fact, if you ask me, you know, what is the single biggest mega trend when it comes to Indian startups in this decade, right? Let's say the next 10 years. It's really Indian startups building for the world, because, you know, you have 2 options, right, Harshil? You can either build for $2.5 trillion of GDP, or you can build for $80 trillion of GDP. And any entrepreneur, kind of given that choice. Now, by the way, you have to start somewhere, right? You have to start somewhere. You either have to build for a small business in the US, or you have to build for a large enterprise in the US, or you have to build a bank for, just because you're successful in India doesn't mean you're going to be successful in the US. But I think that sort of framework, Freshworks, which has been, by far our most successful SaaS company, SaaS startups so far, has spawned over 40 startups, right? And we've been very fortunate to be partners with them for a long time. So I think this is a mega trend.
Yeah, it's interesting.
Yeah, go ahead.
I want to look at that because, I see two things happening in the YC community that are relevant. The first, and this is a change, is I see many more Indian companies trying to sell to the entire YC network. So, there are about 2,000 active companies that are in YC. One of the biggest advantages of doing YC is that you basically can more easily sell all of them. And that is a big new trend where I'm seeing the Indian companies seek out and try to find customers throughout the YC ecosystem. The second trend that I will see that I've seen though, which I think is a little troubling, is that a lot of the Indian founders that I mentor, when they're looking to raise money locally, the local investors in India push back and say, why aren't you going more global, more fast? And in some ways, they argue that it's hard for these SaaS companies to actually have a market in India. Will the companies in India pay, the per seat prices that these companies need? And I think that trend I don't like. I think that trend is short-sighted. When we look at investing in regions in the world, we see India as one of the most powerful markets. And I always love the idea of you get in early and then you're there. Let's not wait till India is 10x bigger before we think it's a good B2B SaaS market. So I do see a number of companies coming from India focused on selling to Indian companies, and I encourage them and I say, that's great. Like, if you don't want to go global right now, if you don't want to focus on the US, double down. And those per seat prices might be low now, but they're only going to go up. As you add productivity to businesses in India, you're only going to be able to justify higher and higher prices. Your customers will do better than their competition if they use you. And so I do want to make sure that global message doesn't mean India isn't a great market to sell into, especially for Indian founders. I would say they have a massive advantage.
So basically, they are both kind of companies that can scale.
Hey, Harshil, I just wanted to build on that. I mean, look, I think, Harshil, you guys are happy with a company that is being very, very successful selling to Indian businesses of all sizes. But I completely agree with Michael. Look, I think, if you look at our cohort, our current cohort, right, we have a company like Shipsy. Shipsy is a logistics B2B SaaS company. They only sell in India, and they sell a little bit to the GCC and Southeast Asia. And to Michael's point, look, if you look at just India, Southeast Asia and GCC, that's an $8 trillion regional block today, right? Which is pretty much bigger than Japan. It's bigger than Germany and the UK put together, right? And it's 70% of China today. So it's obviously not one country, it's many different countries. So I agree with Michael that, you can be global from day zero, you can be regional, around India. So we call that an India plus strategy. It's a thesis that we have. Or you could be just in India, right? I mean, if you look at SME SaaS in India, Michael, right, which has become very, very interesting. I know you've had several companies in your recent cohorts, right? In our current cohort, we have a company called Pagabook. We have never seen a SaaS company grow this fast ever anywhere. Before this, it was Katabook. We looked at Katabook and said, oh my gosh, we have never seen anything get to 10 million active merchants ever this fast, right? They were in our first cohort. But now we look at Pagabook and we were like, oh my gosh, it's getting even faster, right? And they are very squarely focused on Indian SME SaaS, and actually they're not focused on monetization, right? So that's a distribution first business where we're going to get, to tens of millions of merchants using sort of this basic HRMS SaaS product, and we'll monetize through freemium SaaS and various other things that we can do. So I completely agree with Michael that it's not just about being global, but But and that's the amazing thing about what's happening in India, right? Is as an Indian entrepreneur, you can build for India, you can build for India plus, or you can build for the world, and very few countries actually give you that opportunity.
Yeah, very interesting piece. I think when we talk about building like global or large scale companies, I think one of the things I want to get from both of you, given that you guys invest in companies in very early days where you see how a company operates, builds its team, and grows in size, right? And then you see mega outcomes like Airbnb and DoorDash, right? So I think Paul Graham recently tweeted that I'm not sure how many people realize this, but Airbnb would not exist without Michael Seibel. So I want to know from you, Michael, like in the early days, what are some of the things that successful founders of companies do that sets them apart? Or what are some of the things that they focus on very early? I think that will be a great learning lesson for a lot of founders here.
Well, it's interesting. As I'm sure you remember from your days at YC, the batch is full of very impressive people and people who went to good schools, who've succeeded in their careers, who worked at good companies. And the first day of YC, we say effectively, most of you will fail. That this game is so hard that even a room this talented, most people will fail. And I think there are some specific qualities that make the companies end up working out, stand out from the crowd. The first, almost all of them, when they heard that message from us, their companies were a complete shit show. Their companies were not working. But second, almost all of the successful founders, when they heard that message, they thought, oh, I will be one of those few that win. And then they proceeded to conduct themselves differently in YC. And this is what we tell founders now. In our game, if you put yourself in a group of extremely talented people and you're average, you will lose. And that's really hard for a lot of people to understand, because whether it's going through school or college or getting internships or working at a big company, usually if you put yourself in the group of really smart people and you're average, you win, you do well. If you get into a really good law school and you're an average student, you'll get a good job. Imagine if you went into the best law school and they told you 99% of you are never going to be lawyers. You'd ask for your money back. And so we're in a different game. And so I think that the best founders are not afraid to act differently than the crowd, because they inherently understand that the average, even in the great crowd of YC, won't work. And I think that what we tell founders is they have to be more formidable, because being formidable is what gives you the confidence to do what others aren't doing. We have this line that PG invented, which is that, we want you to become the 007 version of yourself. And as we've thought about it, we really try to explain to people that in order to win, you have to be extraordinary. How many jobs require you being extraordinary? Very few. And the founders who are excited about stepping up to that bar, they do really well. And it's always fun to see, because it's not necessarily correlated with what their numbers are on demo day, whether they're in the hot space, whether investors think they're cool. Almost none of that really matters. Our last little saying that I'll share is we say, don't peak in high school, right? Demo day is not where you want to peak as a company. And so, yeah, I think those are the qualities that really separate people. And when you're doing office hours with founders like that, they're invigorating. They're invigorating. You leave the office hour more excited. You learn. I learn a lot during those office hours. And it's part of what makes this job so special. This isn't really kind of a money job. We invest in a company today, we might get a check in 12 years. You don't really, as a result, you don't wake up in the morning thinking this is the job where I'm motivated by money. You're really motivated by working with those really special founders.
Rajan, anything you would want to add on like how company building in early days helps?
Yeah, I think no, I completely agree with what Michael said. What we see is being obsessive, truly obsessive about the problem that you're trying to solve is very, very important, right? We find that these founders who are massively obsessive, tend to win. They're just obsessed about, building great products, solving problems. They never take no for an answer. They keep. So that's one very important trait, I think. I think the second one, sort of Michael referred to it, is this incredible appetite for learning. Because we run a program, right? So we have capital. We give $1 to $2 million of capital. We have a 15-week program, which we now run online, much like everybody else. It's amazing because we can tell the founders who really have a keen interest in learning versus the ones that, they took the capital, so they think they've now got it. And they're not as interested in learning and adapting. So that's sort of the second interesting thing, right? And I think the third one is really just resilience. And time is what shows whether you're resilient or not, right? I mean, as we know, every successful startup will have 4, 5, 6 near-death moments. And it takes a very, very resilient, determined sort of founder or founding team to sort of get through those kinds of things, right? So I think those are the kinds of things. And what we try to do, Harshil and Michael at Surge, is we try to help founders sort of understand, what they need to do in the early days of a company, right, to build an enduring company. Obviously, launching and getting to product market fit is the most important priority. So we spend a lot of time on that. But I think it's a lot more than that. The kind of talent you want to hire, the kind of culture you want to build, how do you want to think about growth? How do you want to think about capital efficiency? And what we try to do over this 15-week period is really go very, very deep into all the different, in many ways, design choices that founders need to make very early in their company's journey, so that they can end up, increasing their odds of building a great company, right? It's as Michael said, most startups fail, but there are a set of design choices you can make early, in the early days. And very simple, right? Most startups don't raise enough capital so that they can actually hire great talent, right? So one of our design choices was, let's give you enough capital so that you can actually, your core team, or whether it's 5 or 7 or 10 people, can really be exceptional, right? Exceptional talent, and that increases the odds of you being able to sort of build a company. If otherwise you might end up with 6, 7 engineers that aren't very good. So that's sort of what we focus on. But at the end of the day, I think it's about just obsessiveness, perseverance, and just the ability to just keep going.
Yeah, that's very interesting. I think we ran out of time, but I have just one last question, given that it's a fintech conference. Before I jump to audience Q&A, I think fintech has gone through multiple trends, right? We started with payments as a big trend, and then lending, and then wealth management. You have companies like Robinhood in US and Zerodha in India. And right now it's going through a different kind of trend where you have blockchain and cryptocurrency being a big trend in markets like US, neobanking being a global trend. I think I'd love to hear from both of you. What do you think? Do you think, first of all, is fintech mostly saturated and done, or are there new opportunities? And if there are new opportunities, what do you think those domains are in fintech? Where do you think a lot of new future unicorns or decacorns will come out of?
So I'll start by saying this. I never answer questions about trends. I want founders to build the products they think should exist in the world. I don't want founders to try to build the products that I think should exist in the world. I want founders to understand their customers 10, 100, 1,000 times more than I understand their customers. So I would say to this question, to all of the founders out there who are interested in building fintech companies, you tell me what the future is going to be. You tell me what the problems are. What I will say, though, is this. YC's been around for 15 years now. And one of the things I've started to realize is that the companies that were innovative and moved quickly and that people call out all the time in our environment, I actually think often they slow down and they peak quickly too. And as a company adds more and more people, it slows down. And that can happen over the course of 2 decades, but that can also happen over the course of 5 years. And so I think that there are a lot of opportunities. And I think that, one of the things that we warn all of our growth stage startups is there are folks coming after you and they're gunning for you. And like, they don't think of you as a startup. They think of you as the big company. And so I think that there are a ton of opportunities. I honestly think that the cost of switching products is only going down. And so I think that the larger companies have a lot more ground to protect. And I think that startups have a lot more opportunities now than they ever before. But yeah, in terms of trends, I'll leave that to the founders. We have a saying at YC when we read applications, we don't want to be too smart. If we're too opinionated about the future, we won't believe an application that paints a picture of the future that we can't understand. And honestly, that's what's so fun about working YC is I get to read everyone else's vision for the future and say, all right, let's help you make that happen. That sounds great. And I never want my opinion to get in the way.
Yeah. Similar question to you, Rajan, but I would specifically say like fintech for India. What do you think the future will look like in next couple of years?
Yeah, sorry, Harshil, my connection was weak. Say that again.
Yeah, saying fintech for India, what do you think the future will look like in next couple of years? What kind of companies do you think will form around in the fintech space? What kind of trends do you see?
Yeah, look, I think we're still very, very early, in fintech, right? Everybody gets very excited that, we have a couple of unicorns in the fintech space. But the reality is, Harshil, as India has gone from not having a digital payments ecosystem 3-4 years ago, right, to having the most advanced digital payments ecosystem in the world today, thanks to UPI, right? With Open and account aggregator, we are actually going to have the most advanced digital lending ecosystem in the world. And then I think as sort of the India stack penetrates further and further into other aspects of financial services and insurance in India, we're going to democratize all these different industries, right? And what that does is it just creates extraordinary opportunity for innovation, right? Who would have imagined that in an industry with Google Pay, with Paytm, with PhonePe, with WhatsApp Pay, with Geo Money, a startup like BharatPay comes out of nowhere and they lead in the merchants payment space, right? Who would have ever thought, right? I mean, you can't, right? So I think, I think even just in payments, we think there's actually a lot more to be done. And that's the most advanced. It's a space that you're in, right? That there's been the most amount of innovation. But if you look at lending, SME lending, consumer lending, you look at insurtech, you look at wealth tech, you can look at the whole, every aspect of BFSI in India, and there's massive amounts of opportunity, right? And I completely agree with Michael. It all boils down to what's the problem that you're trying to solve. The reality is, dealing with most Indian banks is still not the greatest experience in India.
That is true. Ask us about that. I think just we have short of time, but I'll take 1 or 2 questions from the audience that have come in. The first one I have is that, and this is for Michael, YC changed the investing world a lot by launching the accelerator model, and I think that has taken over the world in early stage investing. But I think there are a lot of new trends emerging, like people are doing building in public, raising funds in public, crowdfunding, rolling funds. Do you think the way the accelerator model changed early stage investing, do you think some new model will emerge in the next couple of years, given the kind of changes that are happening in the investing ecosystem?
I think what's funny is how people perceive YC as a static organization sometimes. And having done YC as a founder in 2007, done it as a founder again in 2012, and having worked here since 2013, The only thing I see is change. That's the only thing I see. In many ways, in order for YC to give you a good experience as a startup, we have to remain startup. And so I'll tell you how I think about how YC has changed. I think in the first 5 years of YC, we were the only ones funding young technical people with no resumes. Like that wasn't a trend. In 2005, if you didn't have an MBA and a thick board deck, or you hadn't worked at a company or had a close connection or worked at a startup, you didn't get funding, period. And YC was saying, well, we'll give you a check. I think in the following 5 years of YC, people started to understand the power of demo day. So folks who could raise outside of YC still consider doing YC because they thought, I can get higher quality investors at better prices if I use the auction of demo day. I think over the last 5 years, a new trend has emerged, which is it's all fine and good to help you with funding, but what companies really need is revenue, not funding, revenue. And being able to sell to the YC network is now the key competitive advantage. We have 5,000 alumni. They are in almost every company you'd want to sell to. Even if their startups don't end up working, these are really talented people. They end up in amazing companies, and they're all your warm leads. And so now when a company considers applying to YC, they think to themselves, it's almost as if I get a 5,000 person CRM with email addresses and phone numbers for everyone I'd want to sell right off the bat. And so I think that as capital is becoming more commoditized, the challenge that we're trying to stand up to is the idea of how do we add capital, not on your fundraising totals, but how do we add capital on your revenue totals? And I can't imagine why any startup wouldn't want an investor that can help them reach $1 million in revenue faster. I really think that as we look out over the next 5, 10, 15 years, YC startups will be able to ramp revenue significantly faster than their competition. And if you have a company in your competitive set that went through YC, you should be concerned about that. And that's the kind of unfair advantage that we want to give YC founders.
Interesting. I think, Rajan, the second question is for you. Mentorship and advice is generally less available to Indian founders because we don't have as many large, successful companies. Also, we don't have as broad of an angel investor ecosystem, and you have been in an angel investor yourself. Where do you think founders who are building businesses now in India can get advice from with the lack of a very broad angel investment ecosystem?
Yeah, I think it's a great question. Look, so I mean, the reason that Sequoia, launched Surge 18 months ago, one of the reasons was exactly that, Harshil, right? We launched Surge firstly because we found that founders has to raise 2-3 rounds of capital before they could raise enough capital to get to a Series A. Second was exactly to your point, right? There just wasn't enough. There weren't mentors and folks who could really help founders sort of build their companies in the early stages, right? And then there were several other things around learning and lessons and so on, global learnings. But I think so. Firstly, I think programs like Surge and others are great ways for Indian founders, and we have quite a few now, right, in India. YC, the global program you can get access to. Surge is a regional program you can get access to. But there are other programs like Techstars and so on and so forth, and some local programs that are actually very good. That's one way to get it. I think the second is, look, finding, what I find that founders should do more of is try to reach out to, the kinds of folks who can be helpful to them, right? I have this thing that I talk to founders about, which is just ask, right? If you just ask, 99% of the time you might get a no, but that 1% of the time that you get a yes, that could change your company. Right? And same thing applies to fundraising. It applies to sales. It applies to when you're trying to hire the absolute best talent in the world. And I think the same thing applies to when you're trying to get great mentors. So I think, either get affiliated with one of the programs or, through your investors, you can actually get great mentors, seek out your peers, right? I mean, today when we do have over 40,000 startups in India, right? So, we have many thousand very well established startups now. I mean, 40,000 is a total number, but if you look at pretty well established startups, you're looking at several thousand. So being able to find folks at those companies who can help, I find that, founders just don't ask enough. So, just ask. And you'll be able to get the, I think you'll be able to get the help. So again, look, I do think we have a long way to go on this point as well, Harshil, as an ecosystem. We are many years away from where we should be, but it's getting better. I think the great thing about the Indian ecosystem is it just gets better every single day.
Great. No, I think that was very exciting session. I mean, we are just out of time, but I could spend like hours with both of you, having you on the same panel. But I'm sure you have other things to do. Thank you both of you for joining us. This is really insightful, and I'm sure like all of our founders have learned a lot from this session. And thanks again for taking out of time.